This silver market has been on an absolutely wild ride, and the brand new World Silver Survey for 2026 is here to tell us why. So today, we're going to unpack the crucial findings from this really important report. Here's the plan. First up, we'll dive into the insane price action that has everyone talking. Then, we'll get to the heart of it all, the massive multi-year deficit that's been building. We'll break down the tug-of-war between supply and demand, see what the report is forecasting for the rest of 2026, and then we'll wrap it up with a look at the long-term picture. So let's just jump right in. The price story for silver, well, it's been nothing short of explosive. The report really paints a picture of a market that is just under incredible pressure. And honestly, the numbers are staggering. To put this into perspective, the report shows that silver's price peaked at a record-shattering $84 back in December of 2025. Now, that alone would be a massive story. But believe it or not, that was just the warm-up act. Because just 1 month later, on January 29th, 2026, it did it again, surging to an all-time high of over $121. What's so wild about this is how it just shows the extreme, coiled spring conditions that were building up in the market. And this table from the report just lays out the momentum perfectly. Just look at this jump. The average price in 2025 was over $40, a huge leap from $29 the year before. But that high, a high of over $121, compared to a high of under $36 in 2024, I mean, that's not just a story, that is the story. So this brings us to the big question, the one the entire survey is really trying to answer. What fundamental force is driving this kind of incredible price action? Because this isn't just speculation, it's something deep and structural. And the answer, the big why behind all of this, is a persistent, long-running market deficit. This is really the central finding of the 2026 report. Now, for anyone who needs a quick refresher, a market deficit is just simple economics, right? It means more people want silver than there is silver to go around. And when that happens over and over again, prices, well, they only have one way to go, and that's up. So what does the report actually predict for 2026? A deficit of 46.3 million ounces. And look, while that number is pretty significant all by itself, its real importance, well, that comes from the context. And that context is everything, because this is not a one-year blip. This is the 6th straight year that the market has been in the red. This is a chronic, structural problem that has been draining global stockpiles for a long time. And the report is crystal clear about what this means. This long-running deficit, and I'm quoting directly here, leaves the silver market vulnerable to elevated bursts of reduced liquidity, volatile prices, premiums, and lease rates. In plain English, the market has no shock absorbers left. It's running on fumes. Okay, so we know there's a deficit. Let's pop the hood and look at the two sides of that equation, supply and demand, to really see the mechanics of what's going on here. The best way to think about it is like a giant tug of war. You've got all the supply factors on one side of the rope and all the demand factors on the other. The deficit is what happens when team demand just keeps pulling team supply over the line year after year. So let's look at the supply side first. The report is actually forecasting that global mine production is going to fall just a little bit. Now, some of that is going to be offset by recycling, which is expected to hit its highest level since 2012, as you'd expect with people cashing in on these prices, but it's just not enough to plug the hole. All right, now here's where it gets really, really interesting. If you look at the demand side, you'd think it would be soaring, but the report says it's actually shrinking. These super high prices are pushing down jewelry demand by about 7%, and they're making industries find ways to use less silver. But here's the kicker. Even with lower demand, it is still not enough to close that supply gap. So the takeaway here is that we're looking at an incredibly complex balance of forces. This is a market where both supply and demand are facing serious pressures, but that fundamental imbalance, it just won't go away. So knowing all that, let's get to the forecast for 2026. What other outside factors does the report see pushing and pulling on the market? Well, the survey points to a whole bunch of supportive factors. Things like worries over the independence of the U.S. Federal Reserve, a weaker dollar, global trade tensions, and just general geopolitical risks. All that stuff tends to make a safe haven asset like silver look pretty attractive. Plus, you've got silver's recent addition to the U.S. critical minerals list, which adds a whole new strategic layer to its value. But, and this is a really big but, the report is extremely careful to give a balanced view. It makes it very clear that this bullish outlook comes with some pretty significant risks attached. So, what are the main risks? Well, first, damage from global conflicts could slow down economic growth, and that would definitely hurt industrial demand for silver. Second, if central banks start selling off gold to deal with their own money problems, that could drag silver down right along with it. And finally, those insane price swings we saw, they might just be enough to scare off some of the physical investors. Okay, so let's zoom out. The report doesn't just stop with 2026. It also gives us a really fascinating peek at the longer-term picture and the potential fallout from these years and years of deficits. And this number is just incredible. The total cumulative deficit over just the past 6 years adds up to 762.1 million ounces. That is a colossal amount of silver that has been pulled out of the world's existing stockpiles just to meet demand. Now, this huge deficit and the sky-high prices it causes lead to this key industrial idea called price-led thrifting. And it's pretty much exactly what it sounds like. When a material gets too expensive, big industries get really, really good at finding creative ways to use less of it or even replace it altogether. And this brings us right to the final and I think most provocative question that the report itself leaves us with. After all these years of deficits, after these soaring prices, will silver ultimately become a victim of its own success? Because as high prices continue to chip away at industrial and jewelry demand, you're left with this core tension. And that is what's going to define the future of the silver market. It's a really crucial thing to think about.